Hello everybody, welcome back to my channel where we talk all things finance and investing. In today's video, I'm going to get into the recent report that Goldman Sachs released where they surveyed their family offices around the world, over 200 family offices that is, to get an idea of how they're investing at the moment. Given the balances of some of these family offices, we can really look at how the top 1%, in terms of net worth that is, are investing their assets today in 2025. And of course, there's so much going on in the world right now. This one is going to be particularly interesting. So on that note, let's get into it. Family offices report investments according to Goldman Sachs. All right, so before we get into the video, let's define what a family office is. And really a family office is just really a wealthy family, accumulated their assets, however, and now they have such a big chunk of money, typically $100 million or more, that they are investing and having managed for them. So they'll typically set up like an investment outfit, hire some analysts, chief investment officers, for example, who will handle the management of all of their money through their investments and also tackle things like philanthropy, tax, inheritance, all of this sort of stuff to manage their wealth for them. It's really insightful because you get an idea how the top wealthiest families around the world actually invest their assets. And for people like you and I, we can learn from that and just see if there's anything really that we should be doing or could be doing differently based on what they're investing at the moment as well. Now, obviously, there are some differences with family offices and how they invest compared to people like you and I. Of course, the numbers are much, much, much bigger, so they can invest at scale. And because they have so much to invest and so much at scale, they really have access to investment products that retail investors, people like you and I, do not have access to. And of course, as well, because they have so much money to invest, they don't need the liquidity or the cash on hand as much as you or I would do to meet their day-to-day living expenses. So they are able to invest in instruments that are not as liquid. In other words, they're not as easy to sell if they need the money. So they might invest in something where they couldn't get the money back if they needed to for a year, 5 years, 10 years, or maybe even more. And that's okay for them because they don't need the money. And of course, the other difference is expertise. You and I, we do it ourselves, basically. Look to YouTube, other sources to find some ideas and inspiration and guidance. But family offices hire teams of analysts and investment strategists and specialists in the whole industry to make those decisions for them and to handle everything on their behalf. But with those differences being said, there's still something that we can take from this. And it's definitely worthwhile knowing what they're investing in and, more importantly, what's changed from the last time that Goldman Sachs did this, which was back in 2023. So on that note, let's get into the report and see how family offices are investing now in 2025. All right, so here's the report on the screen here. And I thought it would jump ahead a little bit just to get an idea on the survey respondents. So remember, this is Goldman Sachs going out and doing a survey with all of these family offices, which, as you can see, are around the world. So they actually surveyed 245 family offices around the world, 47% in the Americas, 26% in Europe, Middle East, and Africa, and 27% in Asia Pacific. Okay, and if we look on the right-hand side here, what is the total net worth of your family offices? Well, less than 500 million, there was 14, and I believe it started with 100 million or more. So it's from 100 million in net worth plus, basically. And then you get 500 million to a billion, they had 19, and then a massive chunk of the respondents had between $1 billion and $5 billion in net worth for the family offices that was invested. So clearly you can see this is uber high net worth stuff, and it is going to be interesting to see how they're investing. Okay, let's jump ahead. Okay, so here I've gone right through to the visual on the average asset allocation of respondents globally. By the way, I'll put a link in the description to the report, so if you want to go through the whole thing, then you can access it that way. So here we have it, the average asset allocation of respondents globally. Looking back in 2023, 28% of the portfolio was in public market equities. By that we just mean stocks, things like all the big name company stocks that we know of on the S&P 500 and other markets around the world. But that's up to 31% now. So the weighting has shifted more in favor of public market equities, not by a massive amount from 28 to 31, so only 3% up, but it is up nonetheless. Then as we scroll down, we get into some of the more private equity type of investments. And private equity, if you're not aware, these are just investments in companies that don't trade on stock markets, and they may be even more like startups and things like that that have not yet listed their shares on the stock market, okay? And they can have all sorts of different strategies. But if you look in 2023, it was 26%, and that has gone down to 21% now, okay? And on the right-hand side, you can just see the sort of strategy that the private equity would be, which would be a buyout of a company, growth, venture capital, or others that are in there. So a reduction in private equity as well. So more to public and less to private. Interesting, I think. Cash and cash equivalents, 12%, it hasn't changed. And when they say cash here, they actually mean cash. Now, I don't mean cash in, in a briefcase or something like that. By cash, it just means it's sat on a bank account or a money market fund, for example. But it wouldn't include things like US treasuries or government bonds, corporate bonds, or things like that. So pure cash. The 12% stays the same. I find that kind of interesting. I would have thought with the market having gone up so much since 2023 that maybe there would be a bit more cash on hand, perhaps with a view of market is trading at all-time highs, raise a little bit of cash for the future in case there's a dip, or they just take profits or things like that. But they've held steady at 12% cash, which to be fair is pretty high. So I found that a little bit surprising that they were holding that much cash at the moment. And then we have fixed income. That's up from 10% in 2023 up to 11%. And of course, fixed income are your bonds, US treasuries, and things like that. So they may have some short-dated treasuries in there, like 1 to 2 to 3 years. We don't really know at this point looking at this. But yeah, they have quite a bit that's not invested in private or public equities, being fixed income and cash, okay? Then they have some private real estate and infrastructure. And a lot of this would be done through funds, but this is an advantage that the family offices and the top 1% have. Because of the amounts that they're investing, they're going to get access to things like private real estate and infrastructure and things that maybe people like you can invest into through our portfolios, of course, okay? 6% in hedge funds. I think that's pretty low, but I think it actually makes sense. And it's the same as 2023. And of course, hedge funds are known to have really high fees. So maybe that's the reason that, private family offices don't wish to allocate so much of their capital to hedge funds, but only 6% in and no change there. And then we get into things like private credit, which is just loans, commodities at 1%. I found that very surprising, and I would have thought that that would be a lot higher. Why? Gold. Gold is trading at or near all-time highs. And part of the reason for that is because people are a little bit uncomfortable with the geopolitical risks that we have in the world right now, all the conflicts that we have going on, and gold is benefiting from that. But family offices don't seem to be doing that and investing more in gold. So I found that a bit surprising because as part of their study as well, in terms of risks that they see at the moment, geopolitical risks were number one. So although they've identified that as a risk, they haven't felt that gold is the place to be to kind of reduce that risk. And well, that was kind of surprising to me. And then they have a category called Other. And as you can see, that's down 1% from 2023. And with other, that just means things like art, crypto and blockchain, sports and winery. Again, a little bit surprising for me that crypto and blockchain wasn't a bigger part of this. When you see the moves that crypto has had over the last few years, I would have thought that private family offices would have gotten more involved and had more of an investment on this. Crypto has gotten way more mainstream. I can tell you from my day job and talking to high net worth individuals, portfolio managers and everything on what they're doing in their personal investment accounts, I get way more questions on how to get access to crypto ETFs, ETNs and things like that. So it's getting much more mainstream than it was a few years ago. Surprisingly, private offices haven't taken that approach because there's just not that much crypto according to this asset allocation breakdown. So that's the breakdown right now. Really just an increase in public market equities, bit of a decrease in the private equity, and still pretty high amounts of cash. Really interesting stuff. One other thing from the report that I thought was interesting, their AI exposure. Basically what came out of the survey is 86% of those surveyed have money tied up in AI-related companies and investments. And that's really through things like startups, venture capital funds, and listed stocks like the biggest names that we know, on the S&P 500 that are related to AI. So AI has gone on the radar of family offices and their investments, which is really not surprising given how much it's driven the market over the last few years. In addition to the geopolitical risks that they mentioned as being their biggest risk factor, inflation is still something that's on their minds as well. And inflation numbers have not been going down quite as hoped by the central banks around the world. We've had a good inflation print in the US this week, so that's great, but the UK last time had a terrible one. So inflation is still an issue and something that family offices are worried about at the moment. Okay, so now that we've had a look at what they're investing and what does this really mean for you and what are some of the things that you should think about on this? Number one, you're a very different investor than a family office with 100 million plus, or mainly in the billions, a lot of these people are. And as I mentioned earlier, if they take a big loss, it doesn't dent their day-to-day life at all. So it's a little bit different in terms of the risk tolerance, obviously. And of course, they get access to products that people like you and I don't really get. But, and it's a pretty interesting move this past week, it was announced by Hargreaves Lansdown, the biggest investment platform here in the UK, that they are now going to start to give access to the private markets to investors on their platform. That is a big move and is probably a trend that we're going to be seeing more and more of over time. In fact, there were some words out of the US that Trump or the government somewhere in the administration wanted to give access in retirement accounts to private markets as well. So this may be a trend that we see more of over time for people like you and I to invest in them. When I had a look at the article on Hargreaves Lansdown and how they were going to do this, they're really just tying up with Schroders Capital to give some of their funds on their platform. The only thing was, when I had a first look at this, the fund fees were actually quite high, 2.6% on one fund and a little over 1% on another. I'll probably do a video on this in the future. Let me know by leaving me a comment if you'd like to see it, where I can deep dive in and just compare kind of investments in private markets like this versus public markets and ETFs and things like the S&P 500. But those fees are quite high, and fees can have a massive impact on your portfolio. And the higher the fee, really, the less of a pot you're going to have later in life if you're investing for the long term. So my first gut feel to this is not a very positive one. And I still prefer to invest in public equities through exchange traded funds, but let's see what happens over the next few years in private equity and how that ties in to investment platforms and retail investors like you and I. So here's the bottom line in all this. The wealthiest individuals are leaning into equity still, and they're getting more exposure to AI, haven't really gotten into gold at all, and are holding strong in their private equity investments, something that may come for people like you and I. I hope you liked the video. If you did, why not just click on the like button? It really helps me grow the channel. It's free. It only takes a second for you to do, and it just helps me get the video to more people. Subscribe to my channel as well. I would really appreciate that. Again, free. All it takes is a second or so for you to click, and it just enables me to continue to do this and get my word out there and share the information that I've gathered over the last 20 years. I would really, really appreciate if you would take a second and do that. So thank you so much if you're willing to do that. Leave me a comment. Tell me what you think of this video or anything else that you want to see. It'd be great to hear from you. And finally, with the market at all-time highs, if you want to know how I would invest £10,000 right now and get it into the market, I did a video on that recently, how to invest £10,000 the smart way. So I'll put a link to that video right up there. Just click on that one. I'll see you over there. As always, I wish you nothing but the best in your savings and investment journey.